Hey, what's going on? Welcome back to the channel. In this video, we're going to be taking a look at Avax. I do want to say that I'm not a financial advisor. You should do your own research before investing money into crypto. If you haven't seen the previous update, make sure to watch that before watching this one. It's going to be linked in the top right-hand corner of the screen. Now, without further ado, let's get straight into the charts. So, taking a look at the daily, as you can see, we do have a swing high back in February of 2021 and our swing low here in July of 2021. As you can see, I do have the support block down there, which I gave you last summer, and I've had this since the last summer. So this is the same old chart that we've had, and right now I would be targeting this buy zone in case we see Bitcoin capitulate. So that's where I would imagine Avax would bottom out if we had a strong dip, and from there we could start moving into the bull market in 2024. Just like we did here, just like we bottomed out here. So let's see how that plays out. Obviously, you can see that we are in a falling wedge pattern right now. Potentially a strong breakout is going to be on the horizon right now with a target at $29, almost $30, all the way up to the golden ratio of the Fibonacci retracement, which is the strongest resistance level. So if you're entering off of the support of the falling wedge, that's really smart, especially you did have a couple of dips below. As you can see, we did not reach the yellow trend line, which I gave you as a potential support since that's where we bottomed in November. But from that bottom in November, right now you're 19% up, which is great if you have entered here. And potentially you could look at a take profit in this sell zone, anywhere from 16.86 to 16.05. This resistance block is very important because we tested that as support in September. We tested that as support in July, July twice actually, and in June. And then we had a little move below it, pumped, and then dropped, and we haven't retested this as resistance. So that is potentially what's going to be happening here if all we're going to do is come up here and come back down and we're going to stay in the pattern for the next couple of weeks and months, then that's also a possibility, obviously. But if you're swing trading and you're a probability trader, then I would say just you could take some profits here if you don't care about the price action after you sell, right? You don't care after you've sold whether the price goes up or down, and that's really how you should approach this. You should be emotionless, because if you take profits at this point, right, you made 30%, and then the price goes parabolic, and you're gonna start ripping the hair out of your skull because you're so nervous and you've missed your opportunity. Then that's not a healthy way to approach it, right? You either hold it or you're swing trading it, but you're okay with the fact that you might miss out on a lot of gains. That's how it goes. Generally speaking, if you're holding for the long term, you should be patient, and you should know that there's going to be a lot of opportunities that you could have capitalized on, but you're not, because you just don't want that added risk. Because the profits that you're going to make at the end of the next bull market are going to be so fruitful, and you're going to be thankful that you did not swing trade or do anything risky with your assets, because simply waiting is also hard. But what's going to be harder is that if you sell here and the price starts pumping, then you're going to be left down here with your cash while everyone else makes money, just like we saw over here. Look at this situation. Imagine you sold here and you waited for a retracement. Imagine you sold here and you waited for a retracement. Imagine you sold there and waited for a retracement. That retracement never came. Well, it did come, a year later or a year and a half later. It did come, but you've missed out on all of this. So that's why patience is going to pay off. However, if you're familiar with swing trading, you know how to do it, and you know how to make sure that you're safe and your asset is going to come back down. All I do is I check the RSI on the daily, I check the RSI on the 12-hourly chart and the 4-hourly chart, and if the RSI, for example, on the 12-hourly is doing something like this, right, that's where the RSI is, I'm going to take some profits in this area, and then I'm going to wait for a pullback, because naturally when the RSI is that overbought, when the asset is that overbought, there is a strong chance that we're going to see a pullback, and you're going to be able to buy in 5% cheaper. And that's the sort of swing trading that I do. And on the daily RSI, as you can see, we're breaking out of this symmetrical triangle that we had with a couple of fake outs. It's not even a symmetrical triangle, to be honest with you. Yeah, this is not a symmetrical triangle. This is simply a support and a resistance trend line, and you were squeezed up here, and right now you're breaking to the upside. So this yellow trend line that you just retested November 22nd, that was a very good entry point, and I've had this trend line for multiple months. We've seen retests all the way back in May, August, October, November, twice in November actually, and we're breaking above the red trend line, which we've retested as resistance multiple times as well. As you can see, the first retest was, believe it or not, back in November of 2021, and we've had two fake outs in August and in November. So let's see if this is going to be a, well, actually I don't consider this a fake out because this was a strong break to the upside, right? But we haven't held this level as support. So what we're going to be looking for is once we finish and print this local high, we finish this wave, we're going to be looking for entries off of this red trend line once we come back down for support. If we fail to hold that as support, we go lower, you target the yellow trend line once again. If you fail to do that, you target some of these previous local lows. You can do that, or obviously if you're down here in the oversold, then that's a no-brainer, because every time you're in that area, you are almost guaranteed to see profits within the next 24 hours. And imagine if you hold until the next bull market. If your average buy-in price for Avax is going to be somewhere at, you know, $12, and you go at least back to the all-time high, that's going to be 1,200% of profit. So yeah, just keep that in mind. And for any potential resistance levels, I just gave you this resistance block from $16 to $17 basically. Then you have the 0.382 Fibonacci retracement level, which is at $19. Then you have $23, $24, all the way up to $29.50. And if we start breaking above that, if we start breaking above this August high, that is going to be a very bullish signal that we have. It's going to tell us that we've probably bottomed out here in November, and we're actually on our way to print higher highs and higher lows towards the bull market in 2024. So yeah, this is what I'm going to be looking at, and we need Bitcoin to do the same. We need Bitcoin to print that bullish cross on the weekly, which is where the 20 EMA, the yellow trend line or the yellow line here, crosses above the red line on the weekly chart for Bitcoin. And we want Bitcoin to break its August high as well. That is going to be a major bullish signal. Once that happens, we can safely assume that all the altcoins have bottomed, and from here it's only towards the upside, unless, you know, the government comes up with something else and we're going to get another black swan event, and you know, then it's another good buying opportunity. So let's jump into the Binance chart. So taking a look at the weekly chart on Binance, as you can see, let me just fix that up. So we have a resistance block anywhere from $14.80 all the way down to $13.70. So we're entering this resistance block. And if I go back to the daily actually on the Binance, as you can see, this is the resistance level or the resistance zone or the resistance block, whatever you want to call it, that we created by back testing this area as support back in January and in October. So we lost this support in November, and right now we're coming back up to that level, potentially to retest it as resistance and then to come back down. However, if we start breaking to the upside and we start back testing that support block now, right? We start testing it as support, that's a bullish sign, right? But still, you need to be breaking these local highs in order to be bullish, because you have targets to the upside only when you start breaking resistance levels. So if we see another, you know, lower high, and you know, I would be pretty certain that we're going to be seeing Avax go back to $12 and $13. So yeah, breaking this local high that we printed at the start of November, that would be something to do at first. If not, then yeah, it's just a local high, just a lower high, and it really doesn't mean anything. Now, if we switch over to the weekly, and you could also target the 20 EMA on the weekly as well, because we haven't retested that in a very long time, since April of 2022. So that retest could be important, but keep an eye on this falling wedge, man. This falling wedge, I mean, if we're going to see a breakout, it could be very, very strong. Like I said, these bullish reversal patterns are pretty strong. So if we see a breakout from this pattern, I would just wait until we get overextended, because I don't want to take the risk of selling and the price going higher, right? You want to eliminate all the potential risk. If you don't sell, you still have the asset and you can just wait for another pump, right? But if you sell and you lose on the profits, well, then you have no one else to blame but yourself. Now, the weekly RSI here is also an interesting channel down pattern here. If we start breaking out of that and we start breaking above the 20 EMA on the weekly, that would be a strong confirmation that we're going to see a pretty strong pump for Avax. And that would almost confirm that potentially this was our bottom here, okay? But like I said, we need the Bitcoin confirmation for that. But if we have the breakout from this channel channel down pattern and we have the 20 EMA broken on the weekly, which is a major indicator, that is a good sign for Avax. So let's see if that can happen. If not, the 20 EMA is a strong resistance level for you to take profits at. And the volume isn't doing that great right now. So once we have the volume confirming the breakout as well, that's also something to keep in mind. We need to see volume behind the breakout. If there is no volume, that's likely a fake out. And you obviously have two resistance levels on the RSI here to keep in mind in case you want to sell at either of these to swing trade or to take profits in general. That's also good. But yeah, that's pretty much it for the breakdown for this week's update on Avax. If I missed out anything important on the charts, please let me know down below in the comment section. Feel free to follow me on Twitter. Feel free to join my Patreon. I'm going to see you in the next one. Goodbye and good night.